This week, I started by writing about a new green refinery project here in the US. Southern Rock Energy is proposing to spend $5.6 billion to build a green refinery powered exclusively by renewable energies. And we learned last week that KBR won the feasibility study work for this project. So this is still very early days for this particular project. We don't know, how far this will advance, but it's a good demonstration of new ways of thinking as we navigate through this energy transition, that we're going to pull together technologies like renewable energies and legacy hydrocarbon assets and use them in new ways to ensure that we're addressing these challenges around energy security, energy affordability, and protecting the environment. My next post was about energy stocks, and energy stocks over the past year have gotten beat up. Of the 23 energy stocks in the S&P 500, only 3 of them have outperformed the index, and that's Hess, SLB, and Marathon Petroleum. What I wrote in that post was we can look through the results of these energy companies and get a sense of the lens through which investors are viewing the energy space. And one part of that lens is how investors are viewing activity leveraged against the US versus leverage outside the US. And inside the US, unconventional assets are not as positively viewed right now as they had been in the past, whereas we're seeing a lot of growth internationally. And so companies like Hess, SLB, that get a lot of revenue from overseas are being rewarded by investors today in ways that they haven't in very, very recent past. So it's an interesting change in what we're seeing from investor sentiment in the energy space. My next post was about Bayer's crop science division. And they announced this week that they expect their target market size to double, largely as a result of some innovations they've been pursuing for quite some time now. One innovation that I called out in there was their plan to leverage off-season crops as a fuel as a feedstock rather, to build up biofuels. And so what I wrote about was, regardless of what we think about Bayer and these specific announcements here, it's a good demonstration of how even a sector like agriculture, say, is going to transform as we go through this energy transition. By no means are we limited to just disruption in the energy sector proper. Even agriculture is going to see some change as we think about how do we protect both food security and the environment. So the Bayer announcement was an interesting demonstration of the extent to which we'll see an energy transition disrupt a lot of parts of the global economy, frankly. My next post was about the US EIA published its annual US refining capacity report. And for a refining nerd like me, that winds up being a Christmas morning type affair, where once a year we get access to this new list of all the operating refineries in the US. And what I wrote about was specifically built a chart showing the 14 US refineries whose atmospheric crude distillation capacities are in excess of 300,000 barrels per day. So we have some massive refineries in the US. I think there's 126 refineries across 30 states where the average crude distillation capacity was 144,000 barrels per day. The median was 100,000 barrels per day. So we see these massive mega refineries skewing the averages up. And it's just one example of the kind of some interesting things we can learn by digging through this refining capacity report. My next post was about US crude oil and petroleum product inventories. And I wrote about how we're seeing both those inventories rise above prior year levels. I pointed out the past couple times we've seen this. We've seen crude oil prices dip pretty aggressively for the obvious reason that when you're building up inventories, it means you have more supply than demand. You'd expect price to come down. And the big question is, should we expect an aggressive oil price dip from here? I wrote about a couple of reasons why I wouldn't expect that to be the case. But history is telling us a pretty important lesson here that we should pay attention to as we think about what the future looks like for crude oil markets. My last post was related to that, and it was about US drilling rig count levels. And we are seeing now for 6 weeks in a row, the US rig count is below where it was in the prior year levels. The past couple of times that we've seen this, where rig counts are down year over year, those periods lasted for 105 weeks and 103 weeks. And then we saw even the time before that, it lasted 74 weeks. So the question becomes, we've seen it 6 weeks in a row. Should we expect another year and a half or 2 years of weakness in US oil field activity? I wrote about a few reasons why that might not be the case, why we shouldn't be that bearish about it. At the same time, history, again, gives us some pretty important lessons here that we want to be mindful of when we think about we're not always guaranteed growth off of today's activity levels, particularly in the US where activity could be pretty fickle. It's important to realize that we may be in for a period of time here where activity doesn't do a whole lot of interesting things, at least in the upward direction. So those are my posts for this week. I also publish a weekly newsletter every week where I include links to and summaries of all of my research. That way you don't have to rely on LinkedIn's algorithm to feed it to you. You don't have to go digging through my profile to find what I've written about. It's all in a single email, easy to read, less than 4 minutes to read it all. I also include an energy-related anecdote, insight, or observation. This week I wrote about the North Sea, and specifically the build-out that's happening out there relative to offshore wind capacity, and how it's really following the playbook that we have for oil and gas. So again, it's interesting how as we go through this energy transition, things never sort of move as linearly as we might imagine. There's a lot of dips and turns and surprises as we go, and that's going to be required for us to navigate energy transition effectively. So that way, if you have seen everything that I've posted online, there's going to be something new for you in each newsletter this week. It's the North Sea anecdote that I shared. So I will include a sign up link in my comment below. As always, thanks so much for reading. I hope you had a great week, and we'll talk soon.